Hello and welcome to my channel, The Day Tradester. I am The Day Tradester, and every day I record the trades, whether I'm selling or buying. I record all of my trades so you can see exactly what I'm doing on my swing trading strategy. So today in the S&P 500, you can see we've got a little bit of a recovery going on. We've gotten back almost 50% of what we lost on Friday. And for those of you who sold beyond the current opening price or the current price because you thought we were at the beginning of a downturn, then you actually do have losses. For those of you who are watching my strategy and you choose to follow a set of rules as opposed to emotions, then you've not lost anything. You just saw a downturn in your portfolio value. But this morning you've seen an upturn back from that low. One of the main things you need to remember about trading is you don't lose money unless you actually sell your stocks at a loss. And one of the things that gets me is there were a lot of people, CNBC, on other talking heads, calling this a stock market crash. This is just a mild downturn. This is to be expected. There used to be a common phrase, if it bleeds, it leads, in the news industry. And if you look at long red candles, we can associate them and pretend metaphorically that this is actually bleeding. So to garner clicks and to garner news and to get more eyeballs on their channels, they're going to talk about the stock market crash. Again, this isn't a crash. This is just a short-term downtrend. And it's not even a trend. It just was just one particular day. Of course, nobody knows that. Nobody knew that it was just going to be one day. And depending on what China does in retaliation, it may just end up turning back around and we might go down further. But again, it's unpredictable. The only thing predictable in the stock market is that it is unpredictable. So when you see days like this, stay calm. Don't listen to the talking heads. Don't listen to the people who are looking to get clicks on their YouTube channels or on their networks. Try not to get sucked in and suckered by the fear mongering. And if you're following me and you're following my channel, then you are learning how to be an investor and not an actual trader. So if you're looking at still 10, 20, even some of you might be looking at, you're just now getting into investing and you might be in your 20s, you're looking at another 30 years. So even if this were to actually turn into a real crash, meaning 10% or more of a drop in value, of overall value of the S&P 500, it's more than likely, historically speaking, going to be back and in the green within several months, if not several weeks. So no matter how big the candles are, no matter how many days that we might actually end up in a downturn, if you're watching my channel, you're learning not to panic. Panic selling is when you lose money. Now, even though today we do have a gap up in the opening price and we have a nice green candle moving up in price still, it's a little bit lower than the high that we reached earlier today. But at this point, it's still moving. It's trying to crawl back up a little bit. We did receive a few sell alerts this morning, so we're going to go ahead and take a look at our first one, which is Robinhood, and that's HOOD. Robinhood is a trading brokerage. I use Charles Schwab. I did look into Robinhood before I decided on Schwab. If you're not familiar with Robinhood, Robinhood was a disruptor of the industry in trading. They were the first brokerage to have zero commission trades. So looking at our price on Friday, you can see just like almost every other stock that we owned, price fell below the fast moving average. We do not truly have a continuation candle right now, even though we do have a red candle and it did go down. That's clawing back. Well, it just dropped a little bit, but we do not have a continuation candle of the price continuing down because price is currently higher than the close of Friday's price. So before I end the video and finish all my other trades, we will come back to this. And if price is lower, then we'll go ahead and look to place a sell. And hopefully, if we are selling, we'll be making some profits. And looking up on my board of sticky notes, yes, we would absolutely be selling at a profit. But hopefully, we're not forced to sell. So we're going to move on to our next one, which is IBM. Now, IBM since September 4th, we've seen a nice, a pretty good move. So I don't mind selling any of the stocks that we might have. We're sitting at 2 shares. Leaves me with 2 books total, 1 share per book. So you can see Friday's candle dropped down below our fast moving average. Today's candle is a true continuation candle. Price is currently lower than the close on Friday. So hopefully we'll be selling one of these shares. We sell 1 book at this particular cross, and we have the continuation candle verifying that the trend is still moving downward. So we already have 1 already set in our active trader. We're going to look to sell at the current price. We'll drop down 1 penny below that. So we sold it for $276.80. The one we sold, I bought at $259.59. We'll just round both those numbers to even dollars. So we'll call that a $16 profit on that particular share. And that gives us roughly $150 back into our available trading funds. All right, let's take a look at our next stock, which is Cisco. Cisco Systems. So with Cisco Systems, we currently have 12 shares, and that is 4 shares or 4 books, each book having 3 shares. And not only did we have price move below our fast moving average on Friday, it blasted through our slow moving average as well. We do have a red candle today, but we do not have an absolute true continuation. Price is higher than Friday's close. So at this point, we're going to do the same thing with Cisco that I have on Hood. I'm going to mark on my list. I want to come back to this. And by the time I finish making all of my other trades, if this price is lower, we'll go ahead and set a sell order. Unfortunately, price is currently at $68, and it is $2 lower than my purchase price of 12 shares at $70.04. All right, that's a Caterpillar sell. That is part of my day trading strategy. So I'm going to go ahead and expand this back out to our 3-month chart. You can see I bought back here on August 18th. Or now that I actually take a closer look at the bubble, I can see these were 12 shares that were transferred over from my old account when I transferred all of my assets to this new account that I'm trading in currently. That's why there is a 0. So I can't tell you exactly how long I've been holding on to these. I might have bought in back here at this initial cross. If you're new to my videos, my strategy is that when the fast moving average crosses the slow moving average, which is the blue line, the yellow line is the fast moving average, we look to buy all the shares that I have allotted for that particular equity. And it is possible that I bought back here. And then price dropped rapidly. It dropped faster and fell below our purchase price. And part of the main aspect of our strategy is we're looking to be more like investors than day traders. So if we're unable to sell a stock at profit, we just place sell orders on them. And since I've been flapping my gums, price has certainly fallen down below Friday's close. So we're going to place a sell order on one of the books. So each time price crosses a moving average, in this particular case, it's the fast moving average and the slow moving average. However, I only count 1 cross. I do not count 2 crosses on the same day. So we're going to sell 1 book. So each time price crosses one of the moving averages, that is an opportunity to sell or place a sell order on 1 book. So we are going to count 1 book at a time, and we're going to do 1 for today. Looking into our watch list, right click, we're going to hit sell, and 1 book is 3 shares. So we'll drop this down to 3. Now I bought my shares at, as I said, $70.04. So we go to the first place digit. It is the tens place. So 10% of 70 is 7 cents. We're going to add 7 cents to our $70.04. And it's now $70.11 as our sell price. $70.11, or my sell price. If you choose to follow me, then you might be following the same. If you choose to follow me and do the same thing, then I guess it would be a we. But this is how I do it. We keep the good till cancel and extended hours, and we're going to confirm and send. So there's our sell order on 1 more book of 3 shares. So we're going to move on to our next stock, which is Roku. which is a streaming product service, ROKU. Most of you are going to be familiar with Roku. Well, you can clearly see that Roku has been going down for 4 days. Is today going to be the beginning of a trend reversal? But we clearly have the fast-moving average crossing the slow-moving average, and we have a continuation candle. That's not a true continuation candle, but that doesn't matter. When we have a cross, we do look to sell everything we have, regardless of whether we actually have a true continuation. A cross is a cross, and this is the only of the 3 triggers we do not wait for a continuation candle. What we're looking for is just an actual confirmed cross. There are times when we can have a long down candle, a day like yesterday, and then we have the cross, but then we can have another big green candle up. So we actually have a turn up, and it is either level or even crosses back up all in one day. But we clearly are lower. So as I said, our price currently is lower than our purchase price, so we're going to look to set a sell order. Currently, we have a sell order for 3 shares. However, I buy Roku and books at 2, so this should be a 2 share limit order. So I'm going to do a sell order to get this up to 2, and we're going to set that at $98.99. So we're looking for Roku, and in our watch list, we're going to sell. We're looking to sell 1 Roku at $92.99. $98.99 at $98.99, 98.99. Good to cancel extended hours and confirm and send. There we go. We've got now our 2 shares for that 1 book. Ooh, I was wrong on that. I'm looking at my board, and I did only buy 1 share at $98.90. So we're going to cancel 1 again. And I bought another 1 share at $100.50. What happened? It's quite possible that at one time I maxed out at 4 books with 1 share each, and then I chose to double up. It's possible. Let's see if I can expand that. That can't be expanded beyond 3 months. It's possible when Roku crossed, month or 2, even prior, so 4 or 5 months ago, I might have doubled up then. So we're going to go back to Roku in our watch list. We're looking to sell one share, and I bought it at $100.50. So we go to the first digit, which is in the hundreds place. We take 10% of that, which is 10 cents, and we're looking to sell 1 share at $100.60 is our sell order. 160 cents. Good till cancel extended hours, confirm and send. And then I did purchase 2 shares. So we're coming back in. We're looking to sell 2 shares. And I purchased those at $101.93. Same thing. We take 10% of the first digit, and that's in the hundreds place, which is 10 cents. And we're going to sell at $102.03. $102.03. I always just add when I'm placing sell orders, I always just add 10% of my first digit purchase price to the overall order. Good till cancel extended hours, confirm and send, and we are good. So you can see we've got 6 shares and we've got 2, 4, 5, 6. So everything has a sell order on it right now. So with Roku, we're going to take a look. We're going to look at our 1 year and 1 day chart. And we're going to see if it does continue down in a downtrend, where is a likely place that it might slow down and stop or get some support and rebound and turn back up. You can see here, if we look through all of my trade bubbles, these are all of my day trading that I participated in and took during this run up. If we zoom in here, if you look, we've got an area here where we had price bounce off of, and we reached the same area. So we ultimately reached $104.42, and we reached that right here as well. And that possibly is a zone of resistance. And we've turned back around after hitting that zone. Another area, we're looking at this area of consolidation, but we've already gone past that area. So the next likely possible support that we might get is this area here. We're going to go ahead and draw a box, add a drawing. We're going to put this box in, and we're looking to break through this zone. So I'm going to drop this box, bring it down to the bottom of these candles here, and we're good. So we're either going to hang around in this zone for an unknown period of time. Maybe today is the last day we'll be in this zone, maybe tomorrow, maybe later this week. And we're looking to break out and turn back around and go back up, or we're looking to break down and continue a trend downward. Now, if it does lose support here, we're looking at the next zone, which is, we can see here, we're going to add another drawing right here. Bring this box down as well to cover this price here. And it covers the bottom of this candle. So if we look all the way back to March 19th, we had an area of resistance. We were rising, hit resistance, and we turned back around. And then you can see that resistance turned into support. We had price dropping, price hit an area of support, and then bounced back up. So if we zoom in here, what are we looking for? We're looking to see how much we wiped out. So if we go all the way back to this candle here, which is August 22nd, you can see we played another game of chutes and ladders. It took from August 22nd all the way to October 7th, roughly a month and a half to climb up. And then it took 1, 2, 3, 4 days to wipe out a month and a half's worth of gains, just like the game Chutes and Ladders, baby. So at this point, we're waiting to see whether it takes days or weeks to break out of this zone. And then we're going to be looking at price probably dropping from there. If it goes down to at least $80 or hopefully a maximum of 80. But this is a zone we're looking at now. All right, that's it for Roku. We're going to take a look at Shopify, SHOP. We're going to go back to our daily, monthly, and day candle. There we go. I do want to say good morning to you all now. It's now 6:30 on Tuesday morning. I had to leave and take care of a family issue last night, and I was unable to finish the video. So if you were waiting on the video yesterday, I apologize. Hopefully that won't happen again, but if it does, I'll just address it at that point in time. So at any rate, we are looking. It's Tuesday morning. We're looking at Shopify. Where were we? If I can recall, I just pulled up the Shopify chart. Hopefully I'm not going to be repeating anything. Don't know exactly where we left off. But at any rate, we're looking at on Friday, long candle down. We crossed both the fast moving average and the slow moving average. In reference to the price crossing the fast moving average, we clearly have a continuation down. We're still under the fast moving average. So hopefully we will be selling some Shopify at a profit. Taking a look, I currently have 10 shares. Now, typically I max out at 8, but there are times in which I like to add to my position as price is moving up. And I did that with Shopify. And I bought 6 shares at $161.35. Price is currently lower, so we are going to be setting a sell order. However, I did buy one book at $122.23. So we're going to be actually selling that book. I cannot use the active trader. I have to create a sell order. So we go to our watch list, right click. We're looking to place a sell order for 2 shares. And I bought those at $122.23. Current price, I don't know what the current price actually is, so I have to go do some research because, as I said, it's 6:30 in the morning and we will not be doing good till cancel extended hours. I have to use good till cancel EXTO, which means extended hours plus overnight. For Charles Schwab, extended hours are from 7 o'clock a.m. to 9:30. 9:30 is when the market opens, and that runs until 4. And then the other section of extended hours, there are 2 sessions. There's AM and PM. And the PM session of extended hours runs from 4 o'clock Eastern Standard Times to 8 o'clock Eastern Standard Time. But a couple months ago, Charles Schwab started to allow 24 hours trading on almost everything in the S&P, if not everything in the S&P. So EXT is extended hours, EXTO is extended hours, and overnight. So that's what we would be trading because it's 6:30 right now where you have 30 minutes till 7, but we're looking to sell something right now. Again, I bought a share, 2 shares, 1 book at 122.23, going to the first place digit, which is a 1. We're going to add 10 cents. Well, actually, no, we're not going to be adding anything because we're not placing a sell order. We're actually looking to sell. So I have to go into another screen off camera. Currently, Shopify is right around 150.50. So we're going to raise this to 150.50. It might actually be 150.11, but we'll see how it goes. That could be the ask price. So we're moving into the good till cancel extended hours, confirm and send, and we'll see if that sells. And it did. So we've gotten roughly 40 cents extra over that asking price. So I'm just going to round down from 120 to 122 and to 150. So we have a $28 profit per share, which makes a $56 profit on the sale of those 2 shares of Shopify. Next on the list is SoFi. It's an online bank. All right, we had price move below the fast-moving slow-moving average. Slow-moving average is blue. Currently, the fast-moving average is lower than the slow-moving average. I currently have 36 shares. 18 are already sitting in a limit order. You can see we actually had the cross of the fast-moving average back at the beginning of October 2nd. We absolutely had a continuation candle down. Price was still lower the following day after the actual cross, and that is the time in which I look to sell and sell at a profit. Any share that I can actually sell at a profit, but in this particular case, I chose not to sell completely out on this particular day when we actually had even having a true confirmation of trend. I wanted to wait one more day because it is a bank. And on September 16th, September 17th, I think, Joseph Powell and the FOMC, they cut interest rates, which usually is a good thing for markets. And on September 17th, you can see this is the day right here is where interest rates were cut. The market went up. And then we had 1, 2, 3, 4, 5, 6, 7, 8, 9 days down, which I was hoping it was just investors taking profits. There was no news on SoFi. There was no negative news on SoFi. There was no negative news on the banking industry. So I was hoping this was just investors taking profits. It turned around the next day. Not only did it turn around, we had price go back above both the fast and the slow moving averages, and we were doing pretty good up until you can see we reached $29.80, close to an all-time high, and then Trump announced 100% tariffs on China, and just like everything else, it tanked. It dropped all the way down to $26.16. And then yesterday, again, it is now Tuesday morning at 6:38. Yesterday, price turned around and went back up. And right now, at this point in time, price for SoFi is $26.23. Again, I have rules. One is when price moves across either average, either the fast or the slow, that is an opportunity to sell one book. And when we have a confirmed price and moving down below the slow moving average, when we have this cross of the fast moving average, that is a signal to sell everything that I can sell typically. And more than 95% of the time, I do follow that rule. But I'm not a robot. I'm not 100% mechanical. I do look for news. I do take that into consideration. Or in this particular case, I looked for the lack of news. And if we have this type of price move against any stock and there's actually no negative news, we have to figure out what is happening. And after a nice long run of SoFi had been going up. So this is a 3-month chart that we're looking at. Let's zoom back out, and you can see this is a 3-month chart. SoFi was on a 5-month run up before this point in time. So after a 5-month run, it is typical for some people to take some profits. I wasn't ready to take profits. Again, I was waiting for one more day of downturn. If it had been a red candle, I would have sold all of my SoFi. But here we are. We're currently sitting even at the current price of $26.31. We're still higher than the low of October 3rd. Not only that, we come into our market watch. We're looking for our calendar, and we're going to get rid of everything here. We're looking for just the stocks that we own, all account positions. And then we're looking for earnings. And this is the important thing for today. We have earnings for Goldman Sachs and JP Morgan. This is our earnings calendar. JP Morgan actually just released their earnings at 6:35. So we're going to take a look at JP Morgan and Goldman Sachs. They released their earnings at 7:30. So if either one of these or both of these have good earnings reports and they have great forecasts for the remainder of the year and on into next year, then SoFi Bank will, in sympathy, move the same direction, which would be in an upward trend. And I don't have a lot of information on JP Morgan. I know they have a great outlook for the rest of the year. They just raised their price target for the S&P 500. They forecast near 7,000 for the S&P 500 by early 2026. So by early 2026, we're looking at a $7,000 S&P 500 forecast for JP Morgan. But more importantly, Goldman Sachs. Goldman Sachs has organized the sale of or opening of 8 IPOs, and all of them were successful. And when you have successful IPOs, you have successful profits for the bank, for the investment bank that spearheaded the IPOs. And for those of you who are new to trading and are new to my channel, IPO is an initial public offering. That's when a private company who's grown, has great revenues and great forecasts for the next several years, decides to go public and sell stocks on the open market. And Goldman Sachs in the last several months has had 8 IPOs. So I'm taking that information, both the JPM and the Goldman Sachs, and we're going to go back to our chart, and I'm using that information to make as much of an informed decision that I can. So in order to take a look at JP Morgan, we have to go to my 1 day, 1 minute chart. I usually use 2-minute chart, and again, it's not saving. That's horrible. I don't know why my 2-minute chart isn't saving. But anyway, we'll just look at the 1 minute chart. Let's see. We're going to expand out. And now we're going to look at JP Morgan, JPM. No, not OM. JPM. Sorry about that. Here we go. Okay, JP Morgan. We're looking at $312. They went from $305 at 6:35 up to $312. So apparently they've had some pretty good earnings reports. Looks like they had pretty good earnings. Looks like they reported pretty good revenue. I don't know what time they have their conference call. That can change. Whatever they say in that conference call can actually change direction of this price. But right now, initially, we're looking at a good movement. So let's go back to SoFi and see what that has done in the last few minutes. SoFi has actually gone down in the last several minutes. We're looking at 1, 2, 3, 4, 5, 6:35 right there. There was the report. They went up initially, and they've gone down just a little bit. So going back to our 1 day chart, zooming in. So with SoFi, currently prices at almost $26.28. We're higher than yesterday's close. And the earnings for Goldman Sachs is at 7:30. So we're going to wait. I'm going to wait. If you're watching my video right now, you only have a few seconds to wait to see what I actually did because it is 6:52. So I have almost 45 minutes to wait actually to make a decision on what to do for SoFi. In the meantime, that is all of the stocks that actually hit our sell triggers on Friday. We received the alert Monday morning. Again, it's Tuesday morning. Wasn't able to complete my video yesterday. So I will be back in video for you again. It'll only be a few seconds for me. I'll be back around 7:20 to 7:25. And we'll look at Goldman Sachs as their earnings are released at 7:30. All right, I did a little bit of research into JP Morgan and what their earnings were. They had great forecasts for the remainder of the year for their business, especially for future loan contracts that they foresee, especially since the FOMC price cut. They're also forecasting another 25% rate cut next month. Excuse me, later this month on October. Hold on. When is the next Fed rate cut? Yes, October 28th. 8th and 29th. 29th is when they will actually give the report on whether they're going to cut rates and how much. JP Morgan expects them to do another 25% rate cut. They also have a forecast of much lower charge-offs, meaning writing off bad loans. They expect that many of their loans are going to be paid, so they're going to have a lower rate of charge-offs as the economy improves, especially on into next year. So Goldman Sachs usually is a very strong correlation with JP Morgan, and you can see from September 23rd, we had price moving down. Again, this is after the FOMC cut rates, so there was no bad news for Goldman Sachs. So this possibly was just people taking profits, a little bit of consolidation here. And Goldman Sachs also went up for 5 months. They had a 5-month run, so that is a lot of money for some people to possibly take off of the table, waiting for the next leg up. So for those who sold here around 809, maybe they're going to be buying back in at 786. We do have a little bit of consolidation here. We're looking, today is the 13th, and we're looking at from October 2nd. So we're looking at roughly 2 weeks of just sideways action. I currently have 1 share of Goldman Sachs, and I'm going to do something that I typically don't do. Again, this is based on information. I'm trying to make as informed decision as I can. If you're following me, you're going to have to make your own decision, do your own research. But Goldman Sachs has been very profitable these last several months with all of the IPOs that they had. And that's what these large legacy big banks do. These investment banks, they fund, they organize IPOs. They look to make money and profit from these private companies turning public, and they did very well. So I'm going to max out with my Goldman Sachs. I usually have 1 share per book, so we're looking to buy 3 shares. I cannot use the active trader. That does not work for me in the extended hours. So we're looking for Goldman Sachs. We're going to right click in our watch list. We're doing a buy. I'm buying 3 shares. We're going to max out. Current price is, let me research that. I'm finding that it is $788 is the current price. $792 is the ask price. So we're looking at $788, 3 shares. We are now in extended hours. It's 11 minutes after 7. Confirm and send. And it is not going. So we are going to go to our 1-day, 1-minute chart. And we're going to bump this up a little bit, 788.45. And we're just going to keep moving it. There we go. If it hadn't sold, we would have moved it up again. So we got it at 788.45, I believe. So we're going to go back to our 1-day chart. And again, typically I do not buy when the price of the fast moving average is below the slow moving average. But again, as an investor, especially as traders, you want to make the best decision that you can with all of available information, and just looking at the charts, that's just one piece of the information. News, not just news of the day, but news of the week, the news of the previous month. All of that is relevant. Just in September of this year, this was their busiest month since July of 2021. Again, almost all of the profitable IPOs will lead to Goldman Sachs being incredibly profitable. So if you're watching my videos, just don't copy me. I'm just a regular average guy who is making money trading stocks and investing. But this is something you may want to look into, and if you are able to purchase any stocks, no matter the company, that you suspect is probably going to have a decent earnings report based on all available information, and for me at this point in time, it's Goldman Sachs, then you want to make as informed a decision as you can, because that might be an opportunity that you would be buying low of any particular stock that you've just researched. And at some point after earnings, whether it's a day, 2 weeks, months, selling high. That's where we profit, baby. But in this particular case, if it does turn around on me, I'll just hold the stocks. It is Goldman Sachs, and whether it's this year or next year, they very likely will continue to rise up over the average of time. I'll be super stoked and excited if price moves up on me. Or in this case, if you're a share owner of Goldman Sachs, it would be us. But if it doesn't, I'm not going to be upset. I'm not going to get frustrated. I'm not going to be angry, because I am, again, acting as an investor who swing trades and day trades my long-term holdings. It is a very simple strategy. It is a safe strategy. And I believe that is the best way that I can possibly help you by giving you a strategy that works, a strategy that is not time sensitive for the day or the minute or the hour that you need to buy in and sell out if price moves against you because you're buying companies that aren't considered strong. They're not in the S&P 500. And my strategy that I'm trying to teach you is to buy less risky companies. Now it's trading, it is risky, but we can mitigate those risks, and that is how we stay alive, that's how we stay in the game, and that is how we become profitable. So it is now 7:17. I've got more 4 shares of Goldman Sachs. I am going off video, and for you, it'll be a second. For me, we're looking at around 10 minutes. I'll be back to take a look at Goldman Sachs as they release their earnings. All right, we have roughly 12, 11, 10 seconds left until 7:30 to get these earnings for Goldman Sachs. You can see since I purchased at $7.87 and went to $7.96, $9 increase, back down to $7.85. So here we go. We should be getting the earnings reports. We're not getting any activity right now. I'm going to pause the camera until we get some action. All right, we finally have some action, and it is going the wrong direction. Like I said, if it goes down against us, no big deal. If that is actually the earnings report, again, they were supposed to report at 7:30. All right, we're currently down to 775. I'm looking at the Goldman Sachs reports. They had a surprise of 10.3% to the upside. Don't know what their reported revenue yet is, but their reported earnings at 12.25 per share, which again is a 10.3% to the upside. So apparently they've got something else in the report that is pulling it down. Hopefully this will just be a short term, and 9:30 we might see a little bit more action back to the upside. Looking at their on Google right now, their net revenue was reported at $15.18 billion, which is also tops the analyst estimates. So far both metrics of the earnings per share and reported revenue beat expectations, so that's usually a good thing. I don't know why we're seeing a little bit of downward movement right now. Maybe it's because I bought my 3 shares. That typically is something that occurs often. If you're new to trading and you haven't started yet, be prepared that when you buy a stock, price move immediately against you. That happens more often than you would like to see. If you've seen that way too many times, go ahead and leave a comment. Let us know. We've got a little bit of movement back up. We've gone from 776 to 781, so just $7 per share down. So $21 down from our purchase, no biggie. All right, here it is. I found their reported revenue was $32.15 billion for Goldman Sachs, which is a 2% to the upside over analyst expectations. So it's really all going to come down to the conference call. When we see lack of movement, or if we see a downward movement on good information, there's probably something else in the report that I'm not privy to. I don't get the reports, and there's no reason for me to get these reports because I wouldn't understand what I'm reading anyway. I'm just an average guy out here making money the best I can trading stocks. I am not an expert. I'm not a financial planner, not a financial organizer, other than trying to organize my own finances, which, just like most of you, hasn't been the easiest thing in life, but I'm getting it done. And hopefully you're starting to get it done too. But look, we got a little bit upward movement. Hopefully that'll continue. I'm going to go ahead and pause the video, and when we see a little bit more action, and if we don't really see a great deal of action between before 9:30, then we'll be looking at the 9:30 open, and I'll try to stay here on Goldman Sachs for a while, just so we can keep dipping in and out of Goldman Sachs earnings release. Okay, since my purchase of 3 shares of Goldman Sachs at $7.88, we're now down. We've dropped $20 down to $7.68. But I'm going to continue on with this video. We're going to close yesterday's video out so I can get this up and on YouTube. So we're going to go back to our 3-month and 1-day chart. Now, given that I wasn't able to make my video yesterday, there were a few stocks that hit their triggers and sent us buy alerts. However, overnight, the price moved the opposite direction, and all 3 shares that we received alerts on are now lower. So we will not be purchasing any stocks today. So we're going to take a look at our chart of the day, which is Broadcom, AVGO. They, just like AMD, inked a deal with OpenAI where they are going to supply chips to OpenAI for their build out. So we're going to look at the 1 day, 1 minute chart. Go back to our 2 minute, actually. 2 minute chart. Okay. I'm going to zoom out, and there we go. You can see at roughly at 8:56, roughly 9 o'clock, we'll just call it 9 o'clock. That is when the news was released about Broadcom inking a deal with OpenAI, and they went from $334 all the way up to $372. So you're looking at a $40 gain roughly, and they ultimately closed out at $356. So from $333 to $356. And from the prior day's close, they ultimately had a 9% gain from, expand this out. All right, we're going to go to our 5 minute chart, 5 day, 5 minute chart. And here we go. This is how they calculate. We look from the close of the previous day to today's closing price. That is how the average increase is calculated. It's from previous day's close to current day close. And within that, that is a 9% range for Broadcom. And you see yesterday, I sold 10 shares at $368.49. Then I bought back in at $363. Unfortunately, price moved down for the remainder of the day, and it's continued down from there. But again, that is the normal everyday expectation in trading. So zooming back in again, taking a look at Broadcom, there we are. We had a nice gain over Friday's close. I owned 10 shares of Broadcom prior to the move, sold, made a profit, bought back in, thinking that, or hoping that price would go back up, and ultimately it will go back up most likely. AI is literally going to more than likely be changing the planet. In every economic system, every country that is on Earth. All right, let's go back to S&P 500, our SPX chart. Go back to our 1 day, our 3 day, 1 month. This is our standard chart. Go ahead and take a look at what our trades were for the day. So I sold IBM, Cisco Systems, and Shopify. Put a sell order on Roku. And we made no purchases today, which would have been, again, for Monday. Today's Tuesday morning. So now we're going to take a look at what I did in reference to my realized gains and my portfolio performance. All right, so yesterday's realized gains based on only the sale of 40 records. When the market's going down or it's not really moving up a lot, I do not make a great deal of trades. It's easy for me to make 200, 250, sometimes 300 trades a day, but that's when the market is going up. I'm basically a long investor. I rarely ever short. So my proceeds for yesterday, our realized gains, $81.51. Now, my portfolio performance on yesterday, which we want to account for Friday's performance, it's always a day behind, so I want to keep that accurate. I don't want to use yesterday's performance, which is here on October 13th. We want to go back to Friday's, and that performance on my account was 5.12% year to date. And I opened this account on August 19th, started trading on August 20th, and the S&P 500 was at 2.4. The previous account in which I transferred all of the assets to the new account, you can see this went to August 18th, closed this on August 19th. Account was performing at 16.26% year to date compared to the S&P 500 at 10.54%, which means combined my performance on my account is 21.38% compared to the S&P 500 at 14.54%, which means I am performing 6.84% better than the S&P 500 to date. So for those of you who made it to the end of the video, please like, share, and subscribe. Help me get in front of some other people who are considering entering the markets, or who are not in the markets and they are not profitable, and they want to be more profitable. They don't have a real strategy. They're just following other people on YouTube who's not really teaching them anything at all, and they're asking for subscription fees. My information is at no cost, and it is just how to set up and operate and work through selling and buying trades on a simple strategy using S&P 500 stocks, mostly S&P 500 stocks. And I hope you have an amazing Tuesday afternoon, since I missed Monday's afternoon. And I look forward to making another video and putting it up for today's trading activities. Thank you very much.